In this video, we talk about our TQQ trading strategy. We publish our ETF trading strategies and related information for entertainment purposes. We do not provide financial advice or recommend any security to buy or sell. We are not responsible for any losses that you might incur following any of this information. Trade at your own risk or consult a certified financial advisor. This strategy can be applied to almost any leveraged ETF. TQQ is one of the top traded ETFs in the USA market. TQQ is a 3x leveraged ETF for the NASDAQ. This means when the NASDAQ rises 10%, TQQQ will rise 30%. Conversely, when the NASDAQ falls 10%, TQQQ will fall 30%. When the NASDAQ rallies again by 11.11%, it will be back to its original level, though TQQQ will still be below its original level with 33.33% rise. This is called volatility drag. TQQQ tracks daily performance, but there's no guarantee it will consistently achieve the 3x performance beyond one day. We understand this risk. TQ has risen 94% in 1 year compared to NASDAQ's 31%. In 5 years, TQQ's gain is 370% compared to NASDAQ's 155%. Even a simple dollar-cost averaging strategy would have worked for us. However, we understand the risk associated with volatility and have developed a strategy that works better for us. This is not investment advice, it's purely for entertainment, and there's no guarantee it will always work, but it has worked for us. This strategy is not a simple dollar averaging, but a continuous buy and sell strategy. To follow this strategy, you don't need to look at complex technicals. Basic high and low moving averages are good enough, and you don't need to follow them very strictly. Secondly, how do we trade with peace of mind without worrying about where the market will open and where it will close? We assume that the market will be up in the long term, which is the main investment assumption anyway. It's not a simple one buy and one sell strategy. This strategy cannot be applied to individual stocks, as there's no guarantee they will bounce back. Index ETFs are the best candidates for this strategy. We have also applied this to specific sector ETFs, but we pick ones that are in favor. If we are unsure, we just pick the S&P 3X ETF or NASDAQ 3X ETF, which has performed better in the long run, as tech is a growing sector. Our strategy is to buy with 10% of our trading capital daily, and trading capital is only a small percent of our total net worth. So all those asset allocation checklists are ticked off. Since the NASDAQ fluctuates 0.5 to 1% daily, TQQ will fluctuate between 1.5 to 3%. We expect to book some profit and set some sell orders at every 0.5% rise. We don't expect to book everything on the same day, so other sell orders will remain open until filled. We do keep some runners, which will give us higher profit. There is no guarantee the market will rise after we buy. That's perfectly okay. We look for some patterns to know whether it is going to be an up day or not, which we will cover in a bit. As far as the index is concerned, it doesn't move in one direction without giving a technical bounce. The next day, we come again and buy with similar sell orders. And we repeat this process. We keep repeating this process as long as the trend is up and the market trades above the 50 DMA. Once the market closes below the 50 DMA, we exit all positions, then sit on the sideline or repeat the process with the inverse ETF SQQQ. When the market closes above the 50 DMA again, we repeat the same process with TQQQ. When do we buy? Not at the opening. After 30 to 45 minutes, if the market is inching up from the morning range, we buy. If the market is grinding down from the morning range, we usually buy in the second half, or skip for the day, or sometimes put in 5% of the money instead of 10%. Sometimes we divide the 10% into 3 parts and buy at opening when there is gap down against the uptrend, midday, and 1 hour before closing. We avoid buying near supply zones on the chart. The best part of buying and selling daily is we don't worry too much about daily ups and downs, but keep an eye on the 50 DMA. We are always in the game. We don't simply buy and hold because we don't know how long-term really is. As mentioned earlier, this is only for entertainment. Consult a financial advisor before taking any position.